Are you looking for the easiest way to build passive income in Singapore? Many people dream of earning money while they sleep, and real estate investment trusts, or REITs, are a super popular way to do just that. But picking the right individual REITs can feel like navigating a maze. What if there was a simpler, more hands-off approach? Today, we're diving deep into the CSOP iEdge S-REIT Leaders Index ETF, often just called the CFA REIT ETF. We'll explore if this is truly the golden ticket to effortless passive income for Singaporeans. By the end of this video, you'll know exactly how it works, its pros and cons, and whether it's the right fit for your investment strategy. So, what exactly is this CFA REIT ETF? Think of it as a basket that holds a collection of the biggest and most important REITs in Singapore. Instead of you having to research and buy shares in CapitaLand Integrated Commercial Trust, Mapletree Logistics Trust, and many others one by one, this ETF does it for you. It tracks the iEdge S-REIT Leaders Index, which basically includes the most significant and liquid REITs listed on the Singapore Exchange. This means you get instant diversification across various property sectors like retail malls, industrial warehouses, data centers, and office buildings, all with a single investment. It's designed to make REIT investing accessible to everyone, even if you're just starting out. The primary goal for many REIT investors is, of course, the dividend income, or as it's officially called, the distribution. This is where the CFA REIT ETF really shines for passive income seekers. Let's talk numbers. Historically, the distribution yield of this ETF has been quite attractive. It often hovers around a very competitive rate, sometimes even slightly higher than the average yield of all Singapore REITs combined. How is this possible? Well, the index it tracks is weighted towards the larger, more established REITs, which are often stable, consistent dividend payers. So you're getting exposure to the heavy hitters of the S-REIT world. This means you can expect a steady stream of income paid out to you, which is the cornerstone of any passive income strategy. But here's a key feature that many investors absolutely love: monthly payouts. That's right, monthly. Most individual REITs in Singapore pay their distributions quarterly, meaning you get income every 3 months. Some even pay semi-annually. This can make budgeting a bit lumpy if you're relying on that income. The CFA REIT ETF, however, aims to distribute income every single month. This creates a more predictable and consistent cash flow, almost like receiving a monthly salary from your investments. For anyone trying to build a reliable passive income stream to cover monthly expenses, this is a massive advantage. It makes financial planning smoother and helps you see the rewards of your investment on a much more frequent basis. It's incredibly motivating to see that cash hit your account every 30 days. Now, let's address a major concern for many investors: volatility. The stock market can be a roller coaster, and REITs are no exception. If you pick just one or two individual REITs, your portfolio's fate is tied directly to their performance. If one of those REITs faces a major challenge, like losing a key tenant or having a property in a struggling sector, your investment value and income could take a significant hit. This is where the power of diversification through an ETF comes in. Because the CFA REIT ETF holds a large number of different REITs, the poor performance of one or two is cushioned by the rest of the portfolio. It smooths out the ride. You don't experience the dramatic highs of a single winning REIT, but more importantly, you're protected from the devastating lows of a single loser. This lower volatility makes it a much less stressful investment. You're not constantly worrying about the news for one specific company. Instead, you're betting on the overall health and growth of the Singapore property market as a whole. For investors who prefer to set it and forget it, this reduction in single stock risk is a huge selling point. So, is this ETF the perfect long-term holding? Let's build the case. Investing for the long term is all about compounding. You reinvest your dividends to buy more shares, which then generate even more dividends, creating a snowball effect of wealth. The monthly distribution feature of the CFA REIT ETF is fantastic for this. It allows you to reinvest your income more frequently, potentially accelerating your compounding journey compared to quarterly paying investments. Think about it. Over a span of 10, 20, or even 30 years, this can make a substantial difference. Furthermore, the Singapore REIT market is well regulated and has a strong track record of resilience. As an investor in this ETF, you're gaining exposure to high-quality properties managed by some of the best real estate managers in Asia. These are assets that provide essential services. People need places to shop, work, and store goods. This underlying stability makes the S-REIT sector a compelling proposition for long-term growth and income. By holding the ETF, you're essentially owning a slice of Singapore's prime real estate infrastructure, which has historically appreciated in value and provided consistent rental income over the long run. Of course, no investment is without its downsides, and it's important to be balanced. The main thing to be aware of with any ETF is the expense ratio. This is a small annual fee you pay for the convenience of having the fund managed for you. For the CFA REIT ETF, this fee is quite competitive. but it's still a cost that you wouldn't incur if you bought individual REITs yourself. You need to weigh this cost against the benefits of instant diversification and professional management. Another point is that by owning the whole market, you give up the chance to outperform it. If you are a savvy stock picker and you correctly identify the next high-flying REIT, you could earn much higher returns than the ETF. With the ETF, your performance will always be close to the market average, minus the fees. You're trading this potential for extraordinary gains for the comfort of stability and predictability. So, who is this ETF really for? I think it's an absolutely brilliant tool for a few types of investors. First, the beginner. If you're new to investing and feel overwhelmed by the thought of analyzing dozens of individual REITs, this is the perfect starting point. It allows you to get into the market safely and start earning passive income immediately. Second, the passive investor. If you have a busy career, family commitments, or simply don't have the interest to actively manage a portfolio, this ETF is a fantastic hands-off solution. You can invest a regular amount each month and let the fund do the heavy lifting for you. And third, it can be a core holding even for experienced investors. Many seasoned investors use a broad market ETF like this as the stable foundation of their portfolio, and then they might add a few individual REITs as satellite holdings to try and boost returns. So let's bring it all together. Is the CFA REIT ETF the easiest way to build passive income in Singapore? For a vast majority of people, the answer is a resounding yes. It offers a powerful combination of benefits that are hard to beat. You get a competitive distribution yield that is paid out monthly, providing a consistent and predictable cash flow. You get instant diversification across the largest and most liquid Singapore REITs, which significantly reduces your risk and volatility compared to picking individual stocks. And you get to participate in the long-term growth of Singapore's world-class real estate sector with minimal effort. While you do pay a small management fee and give up the chance to dramatically outperform the market, the trade-offs are, for many, well worth the peace of mind and simplicity it provides. It's a robust, straightforward, and effective tool designed for building a reliable stream of passive income. If your goal is to create an income stream that works for you without requiring constant attention, this ETF should definitely be on your radar. It takes the complexity out of REIT investing and lets you focus on what matters most, watching your passive income grow month after month, year after year. What do you think? Is this ETF part of your strategy, or are you considering it? Let me know your thoughts in the comments below. I read every single one and would love to hear from you. Thanks for watching, and if you found this video helpful, make sure to hit that like button and subscribe for more content on building wealth and passive income in Singapore. See you in the next one.